Everybody, it's Hussein Kabani, your favorite broker, and I have Varan here from Fides Mortgages.
Thank you for having me.
No worries. He's the owner and founder of the fastest growing mortgage brokerage in the GTA.
Thank you.
Thanks for taking time out of your busy schedule to be here with us.
Pleasure, man.
And inform our subscribers about what's going on.
A lot of things going on. I think there's a lot of uncertainty in the market.
There's a lot of uncertainty. Well, let's start with this. Like, obviously, we've started to see like the rates kind of come down or whatever. The Bank of Canada last week dropped from 3 to 2.75 now. We're like, I mean, this is the big elephant in the room. Like, where do you think this is going?
I think everyone predicted we're going to have a busy spring market and the price are going to go up. But it's not shifted as everyone expected.
Correct.
I think there's a lot of fear in the borrowers and the consumers' mind. What's happening with U.S. tariff and what Trump is going to come up with the final decision. So everyone's putting things on hold.
Is that the feedback you're getting from people that are calling your offices and talking to your agents? Basically, you know, I guess they're calling and inquiring, but they're not really moving forward.
Even the people like we've been talking, they're putting things on pause.
So they were considering things, but now
considering.
they're just like, hey, let's kind of wait and see kind of thing.
Yeah, because if you think about it, last end of 2020 was busy.
Yeah.
Like everyone was in a positive mindset, rates are coming down, they were getting ready for it. But the change in government in US took a 180 on the market.
Yes, it did.
And the consumers' mindset as well.
Yeah, because we were really predicting that, right? Like we were saying, okay, and I was saying it too, is like, hey, it feels like this is going to be a normal real estate cycle this year. But that completely got disturbed. And just kind of throw the stats out there right now is like, compared to 1 year ago today, we actually have 55% more inventory. I think it's like around 8,800 more listings available for sale today.
I think we're almost at 23,000 right
now? We're 22.8 this morning, almost 23. And the record was September of last year of like about just over 26,000, right? So we're basically almost getting back to a record high of inventory.
But keep in mind, it may go up, right? We are right after the spring break.
Yeah.
March break. So
well we kind of saw that.
Goes up.
Yeah, like I saw a week over week increase. Usually I've been seeing week over week at 4%. This week I saw it at 6%. But the problem with it is we're obviously building that inventory, but the sales are dropping down too. Like year to date, roughly we're down about 27% in terms of sales.
I think everyone wants to see what is finally everything looks like.
Yeah.
Some industry, specific industry, automotive, they are getting very cautious.
Yes.
And even we had some lender meetings, they're going to do some extra due diligence in terms of the income. Depends on what industry you're from.
Really, eh? So was that a thing before where lenders would look at your industry as well? Or
like if you think about during the COVID, if you
Yeah.
work in a hospitality industry, they'll be looking at, okay, you're really going to be working during the COVID.
That's cool.
So now that's going to be applicable to more like a automotive industry.
So that is something that lenders do look at. And as things change in the economy, they're looking at what you do for a living as well. You know what? That's not really a talked about thing, because usually it seems like when you're going to go get a mortgage, they're looking at your credit, they're looking at your income, looking at down payment and that type of stuff. But they do look at your...
Right? Like what we are dealing is a one-off. Like if you think about COVID time, that's the same thing. They wanted to see your guaranteed hours. Like, did you work? Like if you're in a hospitality industry or if you're in a restaurant industry, how do you know you're going to be open?
Correct. Yeah. Yeah. So now they're looking at these people that have these jobs that may be at risk at this point right now.
But that's also being said that I think this may lead into low interest rate environment.
Yeah.
And if the tariff goes through, I think there'll be some stimulations come from the government.
Yeah.
That's again printing money. I think we might have a peak of the market probably end of this year, next year. That's what my predictions are. I could be wrong, but that's my prediction.
I mean, like, look, we're all kind of trying to figure out what's going on over here. Like I said at the beginning, like I thought we were going to have a normal spring market. It could definitely change by towards the end of the year. You know, like if it goes back up to that level, that's going to be something crazy. So you think that there's a chance that they might stimulate the economy by printing money and lowering the interest rate?
That's the only option.
How do you think that's going to compare to like the inflation? Like the inflation we already just saw yesterday, the number came up. They're predicting 2.2. It came up to 2.6.
It's not a big jump, especially what we had HST
holiday,
HST holiday relief. But the printing money must be needed in terms to stimulate the economy.
Yeah,
like it's similar to what we went through in the COVID.
For sure,
it's not a really. It's kind of a financial disaster. It's like no one didn't expect it's going to be a job loss. I was at the conference. They're predicting 500,000 jobs can be lost. So they need to stimulate it.
Don't you think, like, that's like, not to get too far away from the mortgage stuff like that, but it sounds like a slippery slope a little bit, right? Like, the thing is that we already had this huge increase in prices. I don't think we've lost all of that price, like, but it's come down. And then if they print more money and we repeat this cycle again,
I think it's going to be repeating cycle right after 5 years.
Yeah. Eh?
But then we're going to pay the price for it.
Yeah.
2-3 years later after what we did in the last few years.
It just seems like it's going to take a longer time to recovery if this goes through the second cycle again, because we're already kind of struggling after this first cycle of like printing money or in a mass.
If you're an investor, that's the best time to cash out.
Yeah, 100%. It makes sense. In terms of like mortgage renewals and stuff like that, like, are you seeing people having issues with like renewals? Like any of these people that had like low rate mortgages coming up right now still?
I'm seeing some issues. For example, if someone's on the variable, if they haven't bumped up the payment, I had a client who had a 3-year variable. It's a significant amount of a mortgage. It's a $1.6 million mortgage or $1.5 million mortgage. They haven't paid enough interest. The balance went up by $55,000.
Wow, that's big. That's not even small.
So they were fortunate enough they were able to capitalize it.
Okay.
Because they had some equity built on the house. But if not, they should have come up with the money on their own.
Otherwise, they would have had to come up with the money if they were negative.
Yeah.
Oh, wow.
So we are seeing a little bit of that. And we are seeing a little bit of 1.5% coming up for renewal or 1.8% coming up for renewal. Now they're going at 3.99, closer to 4%. So there's a significant payment increase. But in terms of, I haven't seen anyone who had affordability issue.
Okay. So they're okay. Like, even if they had like 1.5, 1.8, they're renewing at 4, they're like, that sucks, but
where I'm seeing is, I think we talked about it many times, the second mortgages.
Okay.
That's a disaster for a lot of
people. So if I can kind of summarize a bit, like, so what you're saying is that if you manage your debt correctly and you didn't get yourself over leveraged too far in a way that you can't manage. So if you are in that situation where you had your first and you pulled a second, maybe a third, that's where these people are coming up for renewal and they just can't hold on anymore.
They can't hold on. I have a couple of clients, they have first, second, and a third. It's definitely a disaster.
Yeah. Are these people actually coming to you a little bit more in advance, or are they like last minute kind of thing?
Most of them are last minute.
Last minute. And there's basically usually no strategy here at this point.
The option is selling the house.
Selling the house.
But they are not ready to accept that.
And so pretty much this is not going to end well for them.
But once again, same topic we talked many times, pre-con.
Yeah.
I have a condo closing in Bowmanville, $850.
Okay.
Appraisal came at $695.
Woo. 150,000.
150,000.
Actually, I was talking to another client too that bought, not with me, but like he bought in downtown Toronto. I forgot which project it was, but like I think they bought for like 850 down there, and they're same thing. They're like 700,000.
So it's a repeating thing. Is what we talked about before. Is constantly going on.
Yeah.
Only thing is can fix it is interest rate.
Yeah.
Rates are coming down.
They are.
I can even see in some of my payments, like you can feel a little bit of a breathing space, right?
Yeah, like even like we have one mortgage with Scotia, so we see that like on a monthly basis is coming down. And then even I check like my CIBC mortgage and I see like a bigger chunk of it going into my principal now, right? Like before it was like 25% principal, 75% interest, and now I'm about 50-50 on it.
So things are shifting.
Yeah.
So that's a good thing.
Yeah.
But I thought that positivity is going to increase the market and the confidence back. But based on overall economy, I think there's a little bit of a pause from everyone.
Yeah. Are you seeing like first-time home buyers kind of trying to enter the market with this?
Absolutely. I'm seeing a lot of first-time home buyers. They really don't have much to lose if you really think about it. If you're renting it, you can actually buy a good-sized condo for the reasonable monthly payment similar to your rent payment.
Okay. So now they're kind of starting to see the value.
I'm seeing a lot of first-time home buyers are getting into entry-level homes.
Okay. Entry-level homes. And then what are you seeing in terms of like investors? Like you know, we've both bought like a bunch of stuff like pre-construction, whatever else like that. It's worked out for us, and maybe even some resale. But like, are you still seeing people like buying single doors and like trying to make that work?
Investors are really exhausted and they really want to get out of the market.
Yeah.
I think they are just waiting on the tipping point where they can cash out and get out.
Yeah.
Like a lot of investors, including myself,
Sure.
we haven't experienced what we experienced in the last 2 years
Correct.
at all.
Yeah.
So it's a learning curve for a lot of people.
It is, yeah, 100%.
It's
Like
a
we're in the
learning
same
curve for-
situation, right? Like there's some stuff that I'd want to unload too, but it's just a matter of time
Timing.
until the market kind of
So
goes in a
people who
certain
has a
direction.
capacity to hold on to it,
Yeah.
they're holding on to it. Who doesn't have a capacity, they're losing it.
Yeah. So all this being said, like it seems like the market dynamics are actually shifting. Like where do you see the opportunities lie right now for like even for investors and stuff like that? Like where do you think that people can actually do something? Is there any way to make money on this?
A lot of investors, what I'm seeing, they're looking into multiplexes.
Yeah.
Not in Ontario, mostly in Alberta.
In Alberta. And they think that job market and everything else is going to be more stable than...
Also, the pricing makes more sense.
Yeah.
And also the landlord and tenant law makes more sense.
Yeah, that's a big one. The LTB is just...
That's
sucks
that's
here
one
in
of the main
Ontario.
reasons.
Yeah.
And it's pretty affordable in terms of what you can buy there.
Yeah,
And
I think they have better financing options or whatever through CMHC,
CMHC
or
is
maybe
a-
it's just more affordable.
No, it's a really good, amazing financing option. Is
Yeah.
you literally need a 5% down.
Yeah. So overall, like, you think that the rate's going to continue to come down? Like, if we're saying like roughly you're going to get a 4 points mortgage, like where do you think we'll be next year?
I think we'll be.
You're going to get some hate
I
for this,
think
so
we'll
be
be in
careful.
mid threes by end of this year.
So you think we'll come down like another half or so?
If you really think about if you're insured mortgage, you're getting a prime -1.
Yeah.
That's 3.95
Yeah.
on a variable.
Yeah. Yeah. We've seen
So
that rate
two
right
cuts
now.
will going to bring you down to 3.5%.
Yeah.
That's a normal interest rate.
Do you think that's going to really drive people, or do you think it's got to come lower to like if perhaps we are going to try to get back to that 2021 pricing? Do you think the rate has to be lower than that 3 points?
It should be lower than that.
Yeah.
But I think if you don't have an employment, the rates means nothing.
Yeah.
If you're worried about your job,
Yeah.
the rates mean nothing.
Correct. Just like now, like we've seen the interest rates come down,
Yeah.
but we really haven't seen the activity in the market.
Because no one doesn't know what's going to happen.
Yeah.
Like, is my job guaranteed?
Yeah.
Is my contract guaranteed? Like,
Yeah.
what's going to happen?
Yeah.
So I think that's the fear factor holding everyone back,
Yeah.
in my opinion.
So one of the last things I want to ask is like, if somebody has a mortgage that's coming up for renewal, they're not planning on leaving. Like, what's your suggestion at this point? What should they do?
If you're not planning on refinancing, if you're not planning on renewing, talk to the lender
Yeah.
and negotiate a best rate from them.
Okay.
To be honest, moving from one lender to another lender, it's a process. It's like applying for a mortgage again.
Yeah.
Your savings may be 5 basis points, 10 basis points.
Not
You
really worth
wanna-
it.
and most of the time, the retention is pretty heavy into the banks.
Yeah.
They're going to give you the best rate possible.
Right.
Talk to the institutional mortgage broker if you're looking to do a refinance, if you want to do a debt consolidation, if you want to restructure the mortgage.
Okay.
That's the time you should be looking into option to move from one lender to another lender.
Right.
If not, just streamline it, stay with the same lender. That's my humble opinion.
Okay. And what type of product do you think that they should be going on?
So right now I'm advising the clients to go on a variable.
On a variable?
I think same thing we talked about 2 years back as well. But if you think about it, like someone who took a 2-year term or 3-year term in 2023,
Yeah.
when the rates were going up, they were 6-7% right now.
Yeah.
If they took a variable, they're 6-7%. Right now, you can lock the same mortgage to 3.99, 4.1.
Well, it happened to me, man. Like, I think with one of the mortgages I took at like 6.5 points, and as the rates came down, I just checked yesterday. I think it's like 3.95 or something
There you
like
go.
that right now.
And also, you have an option to convert that.
Yeah, you can convert it.
Imagine you took a fixed rate at 3-year
Yeah.
term at the time
Oh,
at
you're
7%.
done. Yeah.
You are stuck with this. So same thing I feel like is going to happen. So it's giving an option to see what's going on in the market.
Yeah. Another thing I wanted to ask you is that, so like say, for example, I'm in a situation with a variable rate mortgage. Great that the rate has come down and more of my money is being allocated to the principal, right? But it's an investment property and I'm in no rush to pay this thing off. Do you think it makes sense for me, or how do I evaluate if it makes sense for me to kind of redo this whole mortgage so I could bring my monthly payment down? Because I'm out of pocket like $1,800 on this thing, right? Can I redo this thing so I'm a little bit less out of pocket? Does it make sense?
There's an option to talk to the bank to see if they can extend the amortization. But
Okay.
usually it's a refinance. You have to go through the whole approval process again.
Really, yeah?
Yeah.
So when do you think it kind of makes sense? Do you think it makes sense to try to do that?
If you want to reduce your if you want to
Your
better
cash
your
flow?
cash flow,
Yeah.
you can talk to them and you need to requalify again.
So you
because they
still-
need to take the payment back. Every bank works different, but they will not drop the payment unless you do a full refinance.
So you have to do a free finance.
Yeah.
So it's an option that could work. And I
Could
guess
work.
you have to talk to the lender
Lenders
that you're
who
with
you're
right now to
with.
see what the rate
It's
would
better to
look
stay
like.
with the same lender, otherwise you need to pay a penalty to move to another lender.
Correct. Yeah. Yeah. But it could make sense.
It could
If you're
make
an
sense.
investor long term, you just want to make your
You are
cash flow better.
buying for appreciation, not for
Yeah.
the cash flow.
Exactly. Yeah. Or in long term hold, right?
Yeah.
Like that's what our still mindset is. Okay, cool. Any last advice for people that are looking to get mortgages or looking to do refinance?
In my opinion, like it's not a sales technique. I think it's a great time to get into the market.
Okay.
I'm seeing condos are purchased under $500,000 in downtown Toronto.
Yeah.
Unheard of.
Yeah, true.
We don't know how long this is going to last. I think the inventory, like builders stop building.
Yeah.
So it's going to come to the point 27, 28. The price is going to go.
Dude, that's a good point. And you know what? I forgot to mention that too. I think I read a stat that said that in terms of new home starts, we're down about 16%. And that's just this year, I think, so far. And last year we were down in new home starts. So what I read is that because there's not going to be that additional inventory that's going to be coming to the market, it's actually going to force the prices of the resale inventory to actually go up. And it's going to be a little bit of time before that new inventory can actually kick in, because we don't have an easy building process, man. Like even with freehold, like a builder launches a site, you're looking still at 18 months to get these houses, and condos like 3-4 years.
They were saying like in 27 or 28, it will be only 1,000 new units available.
See, that's insane.
Because no one's building.
Yeah. So, and then what are those units going to be worth when you take into account like all the new costs for building materials, labor, all of this other stuff?
And with all the tariff going on, we don't know what the cost of the buildings are going to be. So the same house what we are right now is could worth another 15-20% more because of, forget about anything else, the cost of building.
Yeah, like even if we look at some of the properties that we have, like I look at the cost of it or whatever else like that, and I'm like, whatever I paid for it, you can't even rebuild this property for that amount
forget about
of money.
the land price, forget about anything else, just the cost of building.
You can't even build it again.
Yeah.
Okay, interesting. So what we're looking at is saying like, hey, for people that are renewing mortgages, maybe to better to stay on variable. But let me touch on that before I let you go. Like I ran across past client of mine, and he's in the process of kind of renewing, right? And he's like looking at it and saying, hey, I can get a fixed rate mortgage right now for $395, and I can get a variable for the same amount, but I'm okay with this $395, and I'm not that much, into the risk.
What about if you think the $399 could be $299 in 6 months from now?
Yeah. But I guess at the same time, like if you're not a risk averse person and you think that something is going to
go
wrong,
it's not for everyone.
It's not
Some people are happy
number.
with the $399 for payment for 3 years.
That's what I'm saying. If you're okay with
it, don't lose your sleep over.
Yeah, and that's what I ultimately told the client as well. I'm sure you'll talk to him, but that's what I said too. Is like, hey, I'm a bit more of a risk taker, so I would stick with my variable.
And it's like a GIC versus mutual funds.
Yeah, if you're comfortable with it, then stick to the 4 points. It's still a good deal.
It's a good deal.
First house I bought was 5 points. Yeah, exactly. Yeah, so makes sense. All right, cool. Varan, thank you so much for taking the time out of your busy schedule. I know you got the fastest mortgage brokerage growing in the GTA, so congratulations on that.
Thank you. Thank you,
and
sir.
And look forward to having you on again.
Yes, sir.
Awesome.
Thank you.
All right, guys, thanks for tuning in. If you guys need some help with your mortgages or just want to talk to somebody that's honest and give you a good advice about what to do next, and this guy is the guy that basically sends you back to your own lender and says, hey, you better go deal with them. So if you want some honest advice, reach out to Varan and his team. I'm sure they'll set you up with some good advice. Until next time, guys, remember one thing, get Cabani, get sold.
Sell it, sell it, sell it, sell it, sold. Sell it, sell it, sell it, sell it, sold. Sell it, sell it, sell it, sell it, sold. Sell it, sell it, sell it, sell it, sold.